3.8% tax. Okay, now I'm not going to go through the calculation with you. It does apply at the individual level. It only applies for individuals that are higher income, modified AGIs above 250,000 if you're married, 200,000 if you're single. Okay, what I want to talk about is what type of income subject to the 3.8 and what do we need to allocate down to the owners. Over on page 31 here. Okay, so as I said, net investment income is your investment income reduced by deductions allocable. They break the income up into three categories. Okay, they break it up into line one, which is your income from interest, dividends, annuities, royalties, and rents. But then there's an exception. It says other than income derived from any trade or business to which the tax does not apply. So you got to go find out what types of businesses are subject to this, which ones are not. Item 2 says the 3.8 can apply to other gross income derived from any business to which the tax applies. All right, we'll go talk about what type of businesses are subject to it in a second. 3, it says it also applies to net gains to the extent they're taken into account in computing taxable income attributable to disposition of property other than property held in a trade or business to which the tax does not apply. All right, so generally what they're saying here is it applies to capital gains, but also can apply to sale of depreciable trade or business property, 1231 gains, if that business is subject to the tax. All right, so what type of businesses are potentially hit with the 3.8? And the answer is any trade or business that's passive with respect to the taxpayer. Or it doesn't matter if it's passive. If you're a trade or business consisting of trading financial instruments or commodities, you're subject to the 3.8. No ifs, ands, or buts, assuming you're higher income. Now, when the 3.8% tax came into play, they did not tell us what the definition of a trade or business was, and then the regulations came out and they said they're going to use the meaning within Code Section 162. All right. The problem is Code Section 162 does not define a trade or business. All 162 says is if you have a trade or business, you can deduct all your ordinary and necessary business expenses for operating that. All right. So what I'm going to do is show you how to avoid the 3.8. And I do this in every one of my classes that I teach. I put this up just as a good review. At the individual level, to avoid the 3.8% tax, we got to show a couple things. One, you got to show something's non-passive at the individual level. A lot of people will say active. And 2, it's got to come from a Code Section 162 trade or business. And this is unless, this is key, you meet a safe harbor rule in the regs. All right, now, the 3.8% tax, it's listed in your book, falls under Code Section 1411. The regulation exceptions are all under the 1411 regs, okay? The past activity rules apply at the individual level under Code Section 469. So when we prepare a partnership return, we are not determining if the shareholder is active or passive. The shareholder determines this, okay? However, at the entity level, we have to determine if we have trades or businesses. Okay, now, as I said just a second ago, 162 does not define a trade or business. All 162 says is if you have a trade or business, you can deduct those expenses, ordinary and necessary. Okay, the Supreme Court told us that there's 2 main characteristics of all trade or businesses. 1, they have a profit motive, and you have to meet both of these, and 2, sufficient taxpayer involvement. Now, please note, with the sufficient taxpayer involvement one, okay, the taxpayer doesn't necessarily need to be doing work with respect to the business, but they're the one responsible to do the work. So in other words, if you have a rental property, the rental can be a trade or business even though you are not taking care of it, but your employees are, or you hire people to do work like a management company. That could be a trade or business because you're the one responsible to do the work. Okay, so for example, if you have a rental property, you're renting it out to make money. You have a profit motive. However, are you spending enough time taking care of it to constitute a trade or business? Okay, now in the example I just gave us, where's our case? it says they have a rental building, but they require the tenant to pay for the insurance, property taxes, and all the repairs and maintenance. So assume that they require the tenant to do everything, and basically the company just says, hey, leave us alone, send us a monthly check. They're doing absolutely nothing. Well, the problem is, it's probably not going to constitute sufficient taxpayer involvement to get to a trade or business under 162. So what you need to realize is that, okay, if you have a profit motive right here, okay, so you meet test 1, you meet this test, but you fail number 2, this one, it's going to result in a for-profit business, but your expenses get deducted under code section 212. Okay, a different code section. Hey, jumping out to the internet, where everything out here is true, code section 212 says, in the case of an individual, there shall be allowed a deduction for all ordinary necessary expenses paid or incurred during the year for the production or collection of income, for management, conservation, or maintenance of property held for production of income. Okay, so they're saying you can still deduct your expenses because it's set up for the production of income. Okay, now why is this important? Okay, well, this is important because in general, to avoid the 3.8% tax, you have to have a 162 trade or business. If it falls under 212, it's not a 162 trade or business. Okay, odds are you're going to be subject to the 3.8 unless you meet a safe harbor in the regulations